Alright, happy weekend everybody. This video is for Friday, July 19th, 2024. I'm recording Saturday, July 20th. So, we're here at precisealgorithmtrading.com, and really all I do here is go through my personal homework exercises for looking at what I need to look at for the markets so I can make better judgments going into really next week. So, let's dive in here, and I also review my uh, results, especially of my uh, automated trading systems, the ones that you literally turn them on in the morning. I turn them on actually way before the market opens, just because I also work a job still, and they just trade, and they trade when in a specified time frame that's already built into the system, and we're looking for an upward sloping equity curve, which is really what we have here. This is the Dow futures, the YM contract, and let's take a look. So we've got the upward sloping curve. This has been on a recent little bit of a drawdown, real similar to this previous one, and this system, just like the others that I have, is based on catching the big moves and stopping out really um, when when it's not going to do that. So you can see we've got a series of stop outs, which is you got to get comfortable with, but ultimately your equity curve goes up. This is the Russell, which has been putting in new highs, which is what these green dots are. They're equity peaks, and the same thing. It's got a series of $75 stop outs is pretty good. I mean, it doesn't get much better than that. And then you get these big moves. So you catch the big moves, and you stop out on the before, when I had different. I had the same math, but I had like larger drawdowns. You might have got a little bit more um, gain, but you had to wait longer, and you had to wait through some really horrible drawdowns. So I really prefer this for my personality in trading, and that's kind of important from a psychological standpoint. Trading is it's a psychological game. You have to be able to take the drawdowns that are inevitable, and they just happen. Here's the Nasdaq, and so we have this has actually been rising after this. This is about as bad as the drawdown gets in this Nasdaq. Although you can see back here it happened, and it lasted, I believe, over a month. So I mean, it was a lot of trades, but that's okay. I'll take a sideways market, sideways equity curve versus a big drawdown. And on Friday's trade, we had a lot of trades, but if you add all that up, I mean, these stop outs don't amount to much in the scheme of things because we had some really good gains. So that's how that works, and I am going to build some other systems on in other markets, basically like oil, gold, other things that have futures that are worthy of moving. These are just all indexes for the general markets, but having a diverse basket is really it's a nice idea because they can offset each other for losses too. So, all right, the actual markets. Let's dive into that, and let's talk about. Here's I combine all of the main index instruments together. That's the Russell, the S&P 500, the Nasdaq, and the Dow. Does that show up there? Yeah. Um, and that way we can see, basically our trading system here. A monthly chart on the left, a daily chart on the right. I could always flip this monthly down to weekly as well, so we can kind of see. And the color bars are based on the what's going on in the monthly chart, which is our um, our Harvard trading system, Harvard lines, which is the gold line versus I changed this other line to so it changes color when it's bullish versus bearish. Used to just be green, but bullish when it's yellow, bearish when it's that light blue. That way I can just see when it turns. It's just easier. So, and this system's really simple. I mean, it's you get a red candlestick when we close back underneath that line, and you get a green candlestick when you close above the Harvard Gold line. So, um, you can see that it's actually a pretty powerful system. They developed something similar to this at Harvard. I read it about 8 years ago, turned it into a trading system, and um, yeah, it's the basis, it's the backbone, and really has been of my trading for a long time. But I'm just recently decided to throw it up here and use it really as the just to guide us on the left hand side, so that the daily I always keep it in, or try to keep it in alignment with what's going on in the monthly. And if I go against that monthly chart, I know that I'm doing it, which most of the time I'm just not going to do that. So, like in this case, this monthly candlestick right now, if this was the end of the month, that's a pretty bearish looking candlestick. It's a on the monthly chart here. Um, it looks like a spinning top. But the fact that we're still like 10 days away from the end of the market, or 2 weeks or so. Um, that candlestick, or the end of the month, I should say. That candlestick could do anything from here. So, uh, but over here on the right hand side, we have a big red candlestick, and that's also telling because these candles over here, when they turn red and green, are based more off of our simple 30 system, which I've gone through many times in the past. So our simple 30 system is the best on the really the intraday and the daily time frame that I've found or created, and um, when that is in alignment with the monthly chart, I get the best results, if that makes sense, because trends develop from the inside out. Although the monthly chart, um, big institutions, I believe, use this system, or at least some of them do. So yeah, that's the long and short of it, really. All right. Anyways, this is the overall markets. We're in a red candlestick, pushing against the orange line here, which is the EMA, the exponential moving average, 21 period, and it's kind of our um, line in the sand for bullish versus bearish, or at least for bullish versus getting stopped out. And really, in the way we manage our daily systems and our manual trading is the same kind of an idea. Get stopped out, as many times as you need to, but try to get the trend. So, um, yeah, if when this right now is on this drawdown, of course I'm not in these instruments as a like trading thing, but if you look back here at like AVT here, I am in this instrument, and we got in basically off of this green arrow right here, which is when the market started to pull back up again, and we got this drawdown that I'm trying to. So this is an impulse wave up and a pullback, and I like to get in on the third wave if that's possible. That's what I'm looking for here. We got a bullish future cloud, and this thing's in a pullback. Now, again, it could have just took off. We also have earnings just 8/14, so a month away, thereabouts, and we got a gray candlestick. So this one's in jeopardy with the orange line. So, but you can kind of see it's the same. I'm trying to get it on a pullback, not when not when you're way up here. And what's the best trades is when you're in a situation like this. Now back here, it had one of those trades, and then you went into a bunch of red candlesticks. Well, that's when I want to be actually just get out and get ready for the next time it goes up. So, and this just happens to be a random stock. Um, you can see over here on the monthly chart that it's also in alignment with what's going on. It's a bunch of green candlesticks on a pullback. So, and as far as momentum goes down here, we're in positive momentum territory, and on the left-hand chart, we're actually in a squeeze on the momentum indicator, the true Momo indicator, and we're also positive momentum on just the momentum indicator on the bottom there. All this kind of goes together to try to find a trade that, let's look at one that maybe is no, that's a bearish trade. BBY actually is a good one. So this one I got into back here, and it's doing what I want it to do right now. And that's, bullish future cloud, green candlesticks on the monthly chart, impulse wave up, pull back, got in on this ride. We're going to see what happens. So right now this is a positive trade. Campbell's Soup, similar thing. Nasty move on Friday, but it's still fine. And you can see that the monthly chart's green in alignment, and so we do have a bullish future cloud, but boy, this one actually looks like it's, I'm going to play it tight just because, this red part of the cloud right here it looks dangerous, and the thin bullish future cloud also looks dangerous to me. But nothing's wrong with this trade right now at the moment, so this is like just a hold situation, and I think I am still up a little bit. And by the way, I can look at that here. That trade is up $630. So that's literally how I trade. There's other ways to manage and even take better probably risk reward and things like that. But I also work a job that's a pretty demanding job, and right now I can balance all that in my life. So when I go to retire from my regular job, I'll be able to actually manage this stuff a little tighter. So, all right, that's the lesson for today. Let's keep moving. Let's look at the S&P 500 by itself. It's going to take a second to move back to the futures. So here's the S&P E-mini futures contract, which I think has actually got more information in it than the actual just S&P. But the SPX, the SPX is not showing me what it did yesterday, unless it actually broke even, which it did not. So let's say the S&P went down about 0.75%, even though that includes aftermarket trading on Friday, which probably didn't last very long, being that it was a Friday. So let's talk about, we got two red candlesticks in a row. This is sitting on this blue line, which happens to be the 34 period exponential moving average. And really I've got a trend ribbon here, which is very much like our Simple 30 system, which is really misnamed, but that's okay. And so that's what that ribbon's for. It's kind of like your short-term trend, and it's still actually the trend label right here says that it's up, so it's actually still bullish and green, but the price is under it. As you can see, the price is also under the 21, and the price is sitting on top of the 34 at this point. And then you can also see our Keltner channels. That's the two average true ranges, and so we're coming up on that. But we do have positive momentum, even though the light blue went under 0, so that makes it negative. But we'd have the average is up, which is what the red and green line is. So this thing is poised for a bounce, really, probably, I'm going to say, quote unquote, anytime. And over here on the monthly chart, everything's just green. This looks like it's rolling over as far as momentum goes, but we don't have a cross back down. And if that happens, it could get nasty. But we also have a bullish future cloud here on the daily chart. I do want to pull up this because I think this is an interesting study that I haven't shown a lot. this is the tick and the trend. And ticks are literally trades, and each tick, I believe that they use the S&P 500 for this, but I wouldn't swear to it because it really doesn't matter. But the tick actually shows the accumulation of how many trades there are. And in somebody showed me how to build this years ago. These are 1 minute candles, so you can see the back and forth, and you can see when it hits levels like 600 and minus 600. And there's actually, if you zoom out, you can see when it hits 1,000 and minus 1,000. And those are kind of extreme levels for the tick. But what I wanted to show is the trend, because when the trend gets above 2, it has a really interesting reversal effect that, especially if the trend closes in a day above 2, then it's a really powerful tool to show a potential, and it's just potential, reversal that could happen in the next day or two. And I wanted to pull it up here. This is what the trend is. You can go to Investopedia. You can look up the trend. They also call it the ARMS index. I'm not going to get into this, but it's a real, I mean, this is the formula for it. And they'll probably tell you other things about, what it tells you and maybe how you can use it. I'm just telling you, I use it as a signal to see when the trend closes above 2. And I actually have an alert set in my Thinkorswim trading system to let me know when the trend hits over 2, because it doesn't happen all the time. It doesn't even happen all the time on a nasty pullback. It's usually on the nastier pullbacks, which is actually, I think, a great thing for like middle of the day. You see a really nasty pullback, or at the end of the day when you can actually act on it, you can make a trade for the next day. So that's that. I'm going to come back to stockcharts.com, but wanted to show the trend. And so that's the S&P. The Russell on Friday, where is it here? Went down 0.63%. We're on this pullback, although I think the Russell actually looks really strong, although we do have a thin future cloud there, which bothers me. And that's the IWM, let's look at this because I think it's also interesting. I'm in this position. I had some options on it. They got taken out at 50 and 100% profit. I'm looking at my target way up here, over here on the left hand side, which isn't that far away. The close right now is 216. The target there is showing around 232. And even after all that nasty pullback, my position's up $1,650. So you can see, like, this is literally that same, we had a rise, we had a pullback, looking for, I mean, if that wasn't a very impressive impulse wave, which is why we probably got this really pretty big pullback. But I was looking for, especially bouncing off of this lower line that I had drawn in here, the potential to get a nice move. And so this is really a better impulse wave. And now I'm hoping we get a nice reversal down here, and we can continue to ride what looks like a nice chart on the monthly chart with a squeeze that's fired long now. Although again, that's only this month, or this month, and this month's not over yet. So we'll see if that sticks. All right. Flip over to the Dow. The Dow's also on a nasty pullback, but we're coming up on this short-term indicator, our ribbon here, and our 21 period moving average is right there, and that bullish future cloud actually looks a little bit better. We have broken this triangle pattern that's over here on the monthly chart to the upside, which should be a breakout trade and maybe should have some legs. But breaking out and pulling back to where old resistance becomes new support is really common. So coming into this zone makes sense, and I'm expecting a reversal at some point here, where momentum right now is relatively positive still on both time frames. And the NASDAQ. The NASDAQ obviously has been the strongest of all the markets, and we are having a pretty serious pullback here, and we're coming up against possible reversal zones. Same thing. Pretty deep momentum pullback here, with the average still being higher and above zero. And so let's look at a couple of NASDAQ stocks. Apple, which has earnings coming up. Microsoft, which has earnings coming up. All these earnings could be a catalyst for this thing to bounce. Tesla has earnings coming up, which Tesla's looking really positive here. I wish I would have got in back here. I know why I didn't, though. It's because I would have been trading against these the EMA 50 and the EMA 100, which were both obviously red right there, and then they flipped over to green. So a pullback here into any one of these zones and a reversal from there could be really a positive trade. And you can see here on the monthly chart that we got one green candle right now, which that could turn into something pretty positive. All right, that's enough. I'm going to wrap this thing up, and we're going to look at USO and then gold. So oil is, I'm in it. I'm at the moment where I'm going to make decisions to set a stop, pull my stop up, and I'm either going to get stopped out or it's going to continue. Gold is really looking good here, although I'm looking for a bounce to be able to get into that as well. Although, I don't know, I still don't like how extended it is. TLT for bonds, actually looking pretty good here for a potential new trade. Although I'm going to wait for the monthly, I think, to correspond with the daily, because I got run over in that a couple times before. Yeah, and that's enough. So let's look at the intraday of the ES, just because I think that's also worthwhile. Right now, everything's down. Looking for it to start building from the inside out, from the 15 to the 30, into back into a positive territory, which right now looks like it's going to take a lot of. There's going to have to be a catalyst to get that thing bullish again. And the VIX here, you can see it's. I don't know if all that data is real. Every now and then they throw a bad signal or a bad calculation, but if that's real, I mean that's a pretty big wide range for the VIX. I'm actually looking for it to, when it closes on a daily basis back inside the Bollinger Bands, I think that could be a pretty good healthy place to also start to see the potential reversal. And last but not least, we'll do the bullish percent indexes and get out of here. All right, the industrials, minus 4.5% on a point and figure buy signal. The NYA, minus 0.97%. Transports didn't move. NASDAQ, minus 0.38%. The S&P, minus 0.59%. The S&P 100, minus 2.94%. And the NASDAQ 100, up 2.08%. So I'll keep our eye on that, and we're looking for the bounce. Until next time, have a great weekend.